High beta momentum is getting absolutely crushed. IBM was a train wreck on Tuesday, and the only silver lining is the Mag 7 catching a flight to quality bid helped along by a softer CPI print. Still, the markets are getting a little bit dicey out there. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt. If you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 5 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. We're going to keep things simple tonight, and I just want to point out a couple of key differences between the index products. You can see here on the SPY daily timescale that we are stacking daily higher lows as well as daily higher highs, which is great. We're in a short-term uptrend here on the SPY right-hand side of the consolidation. You can also see that we're trading above the daily 20 SMA in orange and above the daily 50 SMA in blue. We're not even close to the lower bound of the weekly expected move, and we've closed at the highs of today's trading range on the Wednesday hammer bar, right? So take that picture and compare it to the QQQ daily chart over here, which doesn't even look remotely similar, right? You could certainly see that we're still stacking lower highs. You could see in here that although we overshot the support trend line, we're technically stacking higher lows as well. So we're in range compression, and we don't really have a daily uptrend, and we don't really have a daily downtrend. You could see that we've closed underneath the daily 20 SMA in orange, and we've closed right at the daily 50 SMA in blue. I will give credit and say that we have a decent lower wick on today's daily bar, and we closed back inside of the Tuesday range. But let's take it one step further. Let's go on over to the Spider's Cash, and let's take a look at the hourly charts here. The hourly timescale is fairly interesting because you could see that, yeah, we opened on the gap up. We produced this sort of opening range on the hourly chart. Opening drive is then to the downside. And all the sellers really need to do here is yield the lower high underneath 751.75 to keep the pressure on, and that just simply didn't happen. Okay, well, what about Tuesday and Monday's high? Can the sellers set a lower high underneath 753.15? And the answer is also no. As a matter of fact, if you look at the Monday and Tuesday highs here, previous resistance is now technically acting as support. And once again, we close at the highs of today's daily range on the S&P 500. An easy comparison is to also throw on the intraday anchored view app set. You can see here, this is the Wednesday anchored view app from last week. This is effectively when Donald Trump says, hey, the ceasefire with Iran is over. Notice that the market's bought up on Monday off of that anchored view app. Same thing on Tuesday morning, and today's low is almost right off of that anchored view app. Now, again, compare this picture to what we have on the QQQ. As we take a closer look to the NASDAQ, I mean, it's just not even close to being the same, right? Yes, we open on that gap up. We don't offer an opening consolidation. Instead, it's just straight down. We smash through the entirety of the VWAP stack. And although I won't say it's a confirmed lower high yet because we just closed right there, the sellers do a decent job of keeping price underneath 718 after failing the gap up here. So it's just not nearly as bullish as the S&P 500. So what this means ultimately is that we're in a push-pull market. It is going to be more difficult to find traction on trades, especially in tech-related names, as you're not really in a trending environment on the NASDAQ. Now, this is never the answer that people want to hear, but there's really no compelling evidence that we have a directional bias or edge in this box on the NASDAQ. This is what we've dubbed the junk drawer, right? So in the junk drawer, just let the market chop around. Let it do whatever it wants to do. Avoid paper cuts. Don't get, little pin pricks and paper cuts and whatever inside of the junk drawer range. Let the market show you that it wants to be bullish by consolidating in the upper 50%, and then perhaps Brigade bolt higher lows over 722. That's what the buyers want to see here. Even more compelling would be, okay, you consolidate here, you Brigade bolt out, but then also show me the clearance of these prior highs. Actually show me a higher high in the NASDAQ 100, and we'll start to become more compelled on the long side. So this would be what the buyers want to see. If you're a seller, you're ultimately just looking for lower highs against the VWAP stack, consolidation down here towards the lows. And if you break 707, just like it's a Brigade bolt out of the junk drawer to the top side, it's a Brigade bolt to the downside out of the junk drawer. Lose 707, you're probably retargeting 700 flat. If we jump back on over to the S&P 500, just to offer some simplified pathing here, because this does have a daily trend behind it, because it does look more compelling on the hourly chart, I'm probably more interested in consolidation here that leads to continuation in the upward direction. Or heck, if the market does pull back a little bit, let's say we do lose that anchored view app and do something that looks like this, I'm still probably sort of looking for higher lows off of 745.83, lower bound of the weekly expected move, the top end of the VWAP stack. And why might that be? I'll just explain this briefly. This is not an hourly downtrend, right? This is just a gentle pullback on the hourly. You technically just set an equal low here. So on the daily chart, and we've talked about this in many, many videos, but this is what we call a soft daily higher low. This is not a firm higher low. For a firm higher low, you need the hourly trend to flip to down. So if the hourly trend flips to down via some sort of lower high and then a lower low underneath this level, could this technically be a daily firm, so I'll just say F, higher low? Absolutely. Right? You're still over a majority of the reference points, certainly the key moving averages, the 20 SMA and the 50 SMA. That would be fairly compelling. Now, at the exchange level, is it really all that bearish? I would say the argument's no, not at all. If you're not familiar with market internals, check out the video tutorial in the top right-hand corner. But take a look at the volume flows this week. In terms of the volatility we've seen, just going sideways here, the volume flows aren't aggressively bearish. Look at them today. They're technically positive. If you look at the advanced decline line, we're positive on Tuesday and today's Wednesday session. The index score closes green. And look at the cumulative builds. I mean, these are not groundbreaking reads over here. Typically, we're looking for plus or minus 5,000 to check that box, but they're fairly neutral, right? So as the market balances here on the S&P side and tries to remain constructive for higher, you're not really seeing bearish evidence at the exchange level. Now, let's flip the script and go on over to the NASDAQ. And what we see over here is almost the same, right? Your volume flows are not aggressively down, even though the market has a pretty strong sell side day. So are sellers attacking the NASDAQ at the exchange level? Not really. So does this align a little bit more with the bullish thesis that we may resolve higher? I would tend to think so. If you look at the advanced decline line, right, we're above the zero mark, and look at the cumulative builds. They're really not doing anything that's overly bearish. Now, again, I would say that in the NASDAQ, let's be patient and let's look for the junk drawer to resolve itself. We don't need to front run the breakout of the balance range in here. We could wait for something over 722. We can wait for something to be constructive here and make new higher highs on the NASDAQ. But at the exchange level, you're not really seeing much deterioration in terms of sell side pressure. Let's jump on over the market profile and see what's going on here. So this is the ES futures first. If you're not familiar with the market profile, check out the video tutorial in the top right-hand corner. But for the most part, here is Monday's value. Here's Tuesday's value. Here's today's Wednesday value. Where are we moving? What direction is value moving? I would certainly argue up. It's more constructive for the buyers. Let's take a look at the NASDAQ now. This is where the picture changes, right? And rightfully so. Here's Friday, here's Monday, here's Tuesday, and here's today's Wednesday session. You can just see how it's like, ping pong back and forth. You're not really in a constructive uptrend. The buyers aren't making substantial progress in the upward direction, so leaves a little bit to be desired. And again, I know it's not the analysis or really the answer that many people want for the NASDAQ to say, could go up in the range, could go down in the range. But honestly, if you try forcing it while you're in the middle, that's where you're going to get paper cuts. So if you just yield to the market and say, okay, I'm going to wait for the market to show me clarity, you probably have higher odds of success, even if you want to fade the top of the range, fade the bottom of the range, right? If you told me, hey, I want to short this at the top end, mean revert, fine. At least you're executing near the edges of the range. But if you're just getting really trigger happy in the midpoint, I mean, be my guest, but you're going to get paper cut to bits. And, that's just not, at least in my trading experience, that is not a fun experience. It is not something that I believe you have a ton of edge in. So that's what we've got on the two major indices. We will just quickly look at the small caps. I would say that they could be better, could be worse. Could be better means that more compelling pictures over 295.25 would be better. Something in here, slightly more bullish, rotating to the top end. If we were to consolidate down here, that's slightly worse, and certainly breaks and Brigade bolts to leave all of this as overhead supply, dropping previous resistance, which is trying its hardest to act as newfound support. Underneath 292.50 would start to open up some problems for the small caps. I would try to keep it simple and just focus on those levels. We will just take a look at the Iran ceasefire anchored VWAP, if you will, from Wednesday of last week. We're technically above that, and I think it's just helping out in terms of the argument that it's better above 295.25 and much, much worse as and if we start breaking down underneath 292.50s. If we jump on into the Russell side of the market internals, let's just quickly check in on these. Any big things that we should be worried about? Not really, very neutral at the exchange level. And how about our market profile for the Rusty? Going out here and taking a look. I mean, value's mostly unchanged, right? Here, 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 and then slightly higher on today's session, but you haven't made meaningful progress. This, of course, is the CPI. Let's jump back on over to the platform and let's take a look quickly through the sectors and see what we got over here. So weekly performance kicks us off. Mag 7 lights the way. That's kind of what's keeping the market anchored, right? In the intro, we said, hey, Mag 7's getting a flight to quality bid, and you can certainly see it in terms of the performance, up 2.4% this week, followed by software up 1.5%. Then we have communications, energy, and then financials. Financials are also another reason that your S&P is going to remain more resilient than the NASDAQ, right? At the bottom end of the barrel, it's healthcare, it's staples, it's semiconductors, it's materials. Then it's tech, and DRAM is technically red on the week as well, down about 17 basis points. So rotation-wise, I would honestly say it still looks okay for the S&P. Let's jump into the structural charts quickly. We'll be very quick through the supporting evidence today. This inverted head and shoulders, I mean, it's certainly resolving higher, which you're not going to get a lower S&P if Mag 7s are ripping. It's just not going to happen, right? They're too heavy of a weight for the market overall. So this looks great. Could it use a pullback? Absolutely. Could it set a higher low? Absolutely. And continuation is bullish. Take a look at the IGV. We're a little bit more balanced here. Ideally, this would consolidate and Brigade bolt to 200 if you want to be bullish for software. Your main drivers at this point are going to be your Microsoft and probably your Palantir. Right? Those are the two big ones that stand out to me that have been acting, I would argue, phenomenally well. Obviously, your cybersecurity names as well, CrowdStrike, PanW, Fortinet, they're acting really, really well for software. And as long as those names are in the driver's seat, you're probably looking at, again, a decent enough rotation to keep the market afloat rather than straight down. If we look at the XLC, of course, we can thank Google and Meta for the strength over here. This looks pretty darn good. We've got a strong reclaim. We never really broke down aggressively on Tuesday on that gap down after the inverted hammer against the 50. That looks constructive. If we look at energy, we are holding higher here, but I think after CPI, the market's a little bit more compelled for lower rates or an easing bias in the future rather than the double hike. If we jump on over the XLF, brand new all-time highs on bank earnings. If we look at the XLV, this is now the bottom of the barrel. A sharp pullback here, but is there not still an opportunity for like weekly higher low? I think so, off of this 155.20. So if we need the rotation argument again, still plenty of room for a constructive uptrend on the XLV. If you look at the XLP, nothing to see here, just sideways in the range. That's fine. It's a defensive sector. Here is the SMH. I do want to pause on this one for just a second and say, hey, anybody who has maybe missed it in the past, don't get too bearish on this head and shoulders pattern. If we break the neckline underneath this 568, I would expect a little bit of an oops, and then we're back higher. Why is that the situation? Well, look back at every other time in recent history that the semiconductors have offered a head and shoulders, oops, and then we rip to the top side, right? You could go back over here. You could say, okay, here's your head and shoulders. You start to break the 50 SMA, oops, and then we rip to the top side. You can go back and you'd see this everywhere, right? Here it is. Oh my goodness, we're approaching a gap down into the neckline. Oops, and you're back higher. Okay? Doesn't mean that it has to happen this way, but please don't get hung up on the narrative that the pattern dictates what happens next. A pattern is just simply a way to describe where we're at in the trend count. Is the chart susceptible? Are we falling into a short-term downtrend? Absolutely. But just because the pattern's there does not mean this thing needs to crash and burn and go to zero. Right? And that's what we just saw with those prior examples. So if we do look below the neckline and fail, I would start thinking about longs. Can we get some new uptrends to form on semis after this big washout, right? So 568 is a big level to watch. If this ends up just being a hammer, and by the way, this is a massive range on semis today. If this just turns into a hammer and we take out the high and we're here, guess what? This is just like a low. This is weekly equal lows, and we try to navigate back up towards the all-time highs. So that would be your upside look there. XLB, not much to talk about on this one. Still just range bound. It's also a really lightweight sector. Here's your XLK, still looking like the Qs basically. Here's your support trend line. Here's your resistance trend line. Show me direction here or here. Until then, range compression. XLI looks great. I think that you have the opportunity here for a really strong higher low. There's like weekly Brigade bolt over the top end of the prior shelf. Let's go on over the XLU, noise, lightweight sector and defensive. Look at the XLY, noise. Amazon trying to wake up today. Tesla, kind of the laggard for the Mag 7 names here, just in the midpoint of that range. So I'd love to see some clarity out of this chart, but for now, not helping, not hurting. Let's jump on over to DRAM. I'd say similar commentary to the SMH. We don't have enough trade history here to determine whether or not, it is going to ultimately go oops and then higher. But based on, the bottleneck boys, as they say online, memory being the bottleneck, I would think that memory is not just going to like crash and burn and go to zero. Yes, the trade is like overcrowded and maybe positioning is too long and we need to sort of like consolidate and digest for like 6 months and form a new base or whatever. But I don't think it's going to fall out of bed and suddenly go to zero. That being said, does this look like a long or a short? Kind of looks like a hold your breath, maybe look below and fail, can trigger some longs off the lows. But if it sort of breaks and holds underneath 54.25, that's where your problems are going to emerge. So I'd really focus on 54.25 into the end of the week. Is this ultimately going to act as a low? What I will say, if we just get a little bit more granular here, is that we broke underneath Monday's low and then closed back above. So if sellers were going to make something more important happen, I would think we need a solid red-bodied bar closing underneath Monday's low. It's just not really what we got. So if this is going to be it, I think we've developed a pretty key pivot to use walking forward. It's good above the low of today's session and certainly bad below. So DRAM watching that very closely, 54.25. And here's real estate. Like, what are we doing on real estate? I think we could pass on this analysis here. Let's just quickly buzz through the supporting evidence categories. Just looking for red flags. Let's watch this low here. I don't like that this is rolling for a lower high and it's back under this low. Financials are picking up the baton, doing better on communications, but not out of the woods yet. Still looking pretty bad on discretionary. This is like, risk off is not full in effect, but got some concerns here on ratios. Let's go on over to the A set. Looking for red flags, mostly neutral through here. I would stick with the neutral read on the A's. Let's go to the B's. We look good here. We look really good here. Bitcoin does have some relative strength to the market here in kind of a crazy way. Bitcoin has been incredibly weak through this entire rally out of the market, but currently it is offering some relative strength. Let's focus on that. Maybe your Coinbase and your MSTR could be interesting. And then HG Copper. Dr. Copper's waking back up, telling us, this is actually a good look over here. Instead of setting bear flag and like just completely getting blown out underneath $6, getting back up over these prior lows, 625, 622s, give or take. It's a pretty constructive look for Dr. Copper, so I like that. If we jump on into the dollar and interest rates, the dollar is finally starting to crack this $100.50 mark after the cooler than expected CPI and PPI. So if the dollar can continue to move lower, that would actually be a tailwind for equities. I'd love to see if rates can come down on the heels of that information as well. Again, now that we're through those reports, let's see if this can trade a little bit more organically and rates can come down, dollar can come down. That would be bullish for markets overall. If we jump on into inverted ZT, you could see a sharp pullback here off of the highs after CPI and PPI, and that is also reflected over here. If we just jump on into the Fed Watch tool, give this a refresh. Hopefully that'll load in a decent amount of time. There we go, back to probabilities. We've unwound that secondary hike, right? We were pricing in 2 hikes, one of them being out as soon as, at one point this week, it was actually December, then it was January, and then it was back to March of 2027. You could see we're back to an extended pause and then maybe a hike here into the October timeframe. This is just slightly more dovish than what we had earlier this week, and the market likes it when rates are coming down. So the perception of rates going forward after the cooler than expected CPI and PPI is technically a bullish tailwind. So, if I'm trying to build a long argument for the S&P and if I want the NASDAQ to come out of this range, well, rates are certainly helping there. If we jump on into the calendar here in terms of the actual results, let me give that a refresh. You could see your big beat on CPIs across the board. And the key component here is just the core CPI actually moved, I would say, meaningfully lower. And importantly, the shelter component of inflation also moving meaningfully lower. I can see if I can find it real quick. I don't want to spend too much time digging through this shelter. There we go. Thank you, CPI BLS, for pulling this out. But from a 0.6 cut in half to a 0.3, more than cut in half to a 0.1, on the last monthly read. Remember, shelter is a huge component of the CPI report. Seeing that move in the downward direction is really constructive for Mr. Warsh there, who's testified now twice, to have more of an easing bias. And, he was appointed to be a dove. Let's see if he can actually be a dove. So shelter really moving the needle here for CPI inflation. It's one of the more compelling fundamental data points that has unfolded this week. Speaking of fundamentals, AEHR, beat and raise quarter. ASML, beat and raise quarter. ASML also said, that they're, let me just go back and, I don't want to misquote myself. Let me just scroll back into my little note here from this morning. From what I can tell, scrolling back up, let me just read it out. They raised their revenue this full year, and it came in between $49.1 billion and $51.4 billion, above expectations of $43.5 billion, right? That's a huge raise there in terms of the actual numbers on ASML. They plan to increase production capacity by 30%. Each in the next 2 years, right? And they also said that their Intel foundry is using Intel's foundry is using ASML's high NA EUV technology on the latest 18A processing nodes. So, this is generally all positive information for one of the semiconductor equipment and manufacturing names, which tells us, hey, people are still using our machines, buying the stuff, which supposedly would indicate that the build out is still well underway, right? So they've got sold out EUV orders for 2027. The main point here is to just say it's not like everybody's pulling back on orders. The CapEx spend is still going directly from all these big hyperscalers straight to the manufacturing and equipment makers, right? Which is, again, bullish for the AI build out. We'll see if TSM can report similar tomorrow morning. And that, of course, would be bullish, again, for build out names such as TSM, ASML, KLAC, KLIC, right? What else is in there? Tower Semiconductor, of course, might fall into that category. Some others will come to mind as we walk forward. Netflix earnings after the close, not as interested there. ISRG, Intuitive Surgical, also after the close on Thursday. Other than that, just some smaller regional banks to end the week. Let's go on over to the platform. Let's finish up some supporting evidence looks and what we've got going on. Where do I want to go? Over here. Quick looks into the bonds. You could see certainly higher here. This is a little interesting. I would think that this should be moving lower on the heels of a cooler than expected CPI report. We'll continue to monitor that one. Credit spreads moving sideways where it matters most and starting to pull back on the shorter durations, the medium durations there. HYG, in terms of junk bond divergence, is still offering a bearish divergence, but it's been so wrong for so long that I'm still going to side with this one, acting as a bottom finder rather than a top finder. Let's jump on into breadth. Just get a sense for how breadth is acting on today's session. Let's just go full screen on this one. Little contraction, not shocked by that. Uptick on new highs versus lows though, which is interesting and keeping things probably slightly more bullish. RSP is a little bit worse than the S&P 500, and I think that's notable considering the strength in the Mag 7, which of course is the heavyweight components of the market. So the question just becomes, is this doing anything wrong? I would still say no. Lows, higher lows, higher lows, higher lows. Still constructive here on equal weight S&P, and your NASDAQ is still in that range compression here, even on the equal weight. Let's jump into volatility and see what we got on VIX. VIX actually heads lower today. I would start paying attention to a little bit of complacency effect. If the NASDAQ breaks down and the S&P is lagging, if everybody starts reaching for insurance at the same time, that could start to provide a little bit of a spike to the VIX. Of course, it's just going to be a headwind to markets. So let's be aware of that with the VIX lower today on a down day, or at least a pullback morning on the S&P 500. VVIX is very similar, and our vol futures still in a really deep contango, and the one-day VIX honestly just set a new local low. I mean, that's pretty interesting that the one-day VIX is at a new local low as the market pulls back the way it did this morning. This is a great segue over into our leadership and core list of companies. So let's kick things off with NVIDIA. I mean, just save your bar, completely save your bar here into the close. V-shaped recovery, strong push, and left with a daily hammer. I honestly would have liked a bit more, just the inside day and then take out inside day high to rally tomorrow. I think for face value, it's a nice close back above the daily 50, still above the daily 20. This is technically bar-to-bar higher lows along the way. So, I mean, face value, bullish, trying to look for higher, but just being a little bit cautious about these incremental higher highs, and longs getting a little bit disappointed. Anybody who's buying these highs had to sit through a nasty pullback and is maybe like, okay, I guess, I can hold it overnight. But I think personally, my look would have been, okay, show me some kind of a higher low in here, like a meaningful, 1 day sideways, 2 days sideways, hammer or whatever, and then we're up and out. That would be a little bit more tradable, but at face value, bullish. Let's go on over to Apple. Really big strength on Apple, pushing out to a new all-time high. There's really no comment here other than just flag it out over this previous high, or if it pulls back more deeply, looking for longs off of 315, hourly and daily higher lows. Let's jump on into Microsoft, really strong today. pushing up and out into the top end of this range. Next steps here are just like, does this range actually break out? Can we clear the daily 50 SMA, or do we just get swatted back down? This has been one of the most disappointing charts in terms of breakouts, specifically this thing back over here. We'll see if it wants to find a firmer footing and start to approach or re-enter the overhead supply. So 396.75 is a big spot. Let's jump on into Amazon. Really beautiful action here on Amazon. I was a bit disappointed that this basically happened in the first 5-minute bar. It moved straight to the 50 SMA, but nonetheless, there's your sort of inside day breakout into the 50. Very constructive here out of the inverted head and shoulders. And again, the Mag 7s just look really solid. So you could either get day 2 continuation, or if you pull back, it's very straightforward. Ideally, you're getting gap fill reversal over about 250 on Amazon. So 2 ways to trade this. Let's go to the hourly chart. 2 ways to trade it. I would look for this and day 2 continuation, or if it starts to pull back. I don't know that I would short Amazon, but I would be waiting here for a potential higher low. Let's go on over to Google. Google, another strong name today. This is actually the name we were long this morning in the group. And so Google, nice push out of the 4-day range over the 20 SMA. This has the bid beneath it from Uncle Warren, so thanks Warren Buffett. I don't know about new money longs here. I think Google could give a check back for an inside day or two and then start to go over the 50 SMA. Obviously, your higher time frame pattern is the inverted head and shoulders. Remember, these things don't have predictive powers. They just tell us where we're at in the trend count. So it's just a higher low after here's your low, here's your higher low. We're coming back up into equal highs. So the trend is not fully resolved to up yet, but it's certainly trying. So you preserve that by either inside days and higher lows, and then a higher high, or you just get straight up day 3, which might be a little bit much, especially at the 50. But we'll see if we can get pre-earnings run-up. That's the premise kind of behind some of these charts. Pre-earnings Mag 7 run-ups seems to be the name of the game. Let's go over to this Broadcom. Nothing to do or say about this. Just middle of the range. I guess constructive for a higher low, but not trading that personally. If we go on over to this Metaverse chart, I mean, this is kind of like your flag, if you will, but really strong on the Metaverse. This has been a little bit of a tough chart to get involved in. Today would have been the day over a prior bar high, but for now, just kind of looking for consolidation and maybe continuation, or if it pulls back, show me higher lows over 663. You can see it a little bit more clearly on the hourly, right? So if the hourly goes double top, great. There's your double top under the neckline. Half the support here, get back above, and then breaks over the double top would be interesting over 687. So chart needs a little bit of work in terms of setting something up on the hourly, but close, very close, and definitely an in-play name after this big up day, gap up, sustaining, and breaking out on today's session. Looking for higher on Meta, but please look for pullbacks first. Here is your head and shoulders on MU. No hold of the 50 SMA here, closing underneath. A little bit more cautious on a name like MU. It's down 7% today on volume that is at the moving average there. You can see it's 105% of the 20-day average. It's not really what you want to see if you're sort of going to chalk this up to like, oh, it's low volume summer selling. It's not really low volume. It looks a little bit more like distribution to me. You can see higher volume on the sell day versus some of these balance days back over here. If it was going to hold the 50, it pretty much needed to hold Monday's low. I get it. We closed back over Monday's low, but you broke to a new lower low. I'm not fully convinced on this stuff, especially with SK Hynix now being listed on U.S. exchanges. I know it's not on the core list of companies, but SKHY, this is the superior product. They also own more of the market share for memory, and it's definitely just, it's weighing on names like MU. And like, keep in mind, MU is not, this is not like an early stage base and like, wow, we're going to break out of this thing and drift into an uptrend. We're up more than 300% from the March lows. This thing can take a breather, and that's not even including where it came from way back over here. I mean, you take this measurement and you're like, geez, how many thousands of percent is that? About 1,200%, right? So it's not like you're early to MU by trying to buy it off of the 50 SMA. I would actually argue that you're fairly late. So, I don't think this has to be higher. I don't think it's that straightforward. Would I love to see MU sort of perk back up and do something that looks like that? Sure. I'd love that just as much as everybody else. But for now, this little consolidation is not really doing it for me. I would need to see either a big look into this gap that then reclaims, sets up a base. Now we have inverted head and shoulders. Maybe this is like a 3-week process, a 5-week process. And even if it needs more than that, if this needs 6 months sideways after 1,200% rally off the lows, then like, so be it. That's fine, right? That is okay. If MU goes sideways for 6 months, it doesn't have to just give the first test of the 50 and just start sprinting again up towards like 2,000. Let's jump on over to this Tesla. Nothing to do or say on Tesla. I think we have to wait for earnings. Unfortunately, this low is really compelling at 390. I would love to see a look below and fail on it for rotations back to the range high, but it's just been so stubborn. So I'm not going to force the issue if it doesn't want to offer me an entry here in the range. It's going over this JP Morgan, really strong on earnings, up and out. I think higher lows and continuation is the name of the game there. It's going over this AMD. What was looking like relative strength on Tuesday's gap up, not kind of doing it anymore, right? You're just kind of in the balance range. This is now technically a lower high. I think this needs more time, unfortunately, now. And this is going to be a nice segue into some of the leaders. I want to talk about them before our additional trade ideas. You're just chopping around in the middle of AMD's range. If we look at Intel, you're getting a little bit of support off of this low. So, undercut and reclaim, look below and fail at 100 could be interesting. But let's go on over to names like SanDisk as well for the memory trade. You're broken underneath the 50 SMA at this point. Again, could it reclaim? Could it rip? Anything's always possible, but SanDisk has been the poster child of this. Look at the high volume selling over here instead of the low volume. Like, let's just take a look. See this day right here on the really low volume, or see how this sell day over here is lighter volume. The selling over here is lighter volume. That's what you want to see. If this is going to have more gas in the tank for upside, you don't want to see high volume sell days, right? That's distribution in a nutshell. So the fact that it's tested once, twice, 3 times, 4 times, 5 times the daily 50 SMA, it needed to basically look below and fail immediately off the open if you're going to remain constructive for higher lows. 5th time is not the charm, right? You want to be trying this on first attempt, second attempt. You don't really want to be trying it on 5th. So not really compelled on SanDisk. And honestly, in these memory names, I've been a little bit, less compelled to offer bullish commentary ever since we broke down underneath these prior lows. I think we have overhead supply, longs late to the party, are just getting absolutely punished. So I don't think there's much to do in SanDisk. Let's go to ARM. ARM's another one that's been really punished underneath these lows. It's been nasty off of the highs. ARM, look at Qualcomm, right? This is another one that's been really nasty off of the highs in here. We're underneath the 50 SMA. Look at a Marvel, right? These leaders that were really, performing quite well are no longer doing it. Look at the lower high underneath the overhead supply. What else has been a poster child over here? Look at a Bloom Energy. This one's bouncing a little bit more with a hammer, but still underneath the 50 SMA. Go look at an NBIS. Again, another one that's going to offer a hammer in here, but you're underneath the 50 SMA. That's no good. That has been a poster child. We were sort of talking about this in the group, but you haven't heard me talk about APLD recently because the theme's not working. You don't want to be involved in these crypto miners turned data centers. You haven't heard me talk about Cypher recently because you don't want to be involved in this underneath the 50. You don't want to be involved in Irene underneath the 200. You don't want to be involved in under the 50. Space as a theme, right? RKLB. There we go. Rocket Lab. You don't want to be involved in this as it tries to reclaim 100. The time to really set that look below and fail up is this: reclaim the 50 and go. It's not working. You don't want to be involved in Rigetti right now. Quantum certainly is not working underneath the 50 SMA. So I don't want to say the themes are completely falling apart, but they're pretty darn ugly. Go look at an STM, which, I thought looked okay headed into today's session. If we could break a prior day's high, maybe we're supporting over the 50. That breaks today. Go look at a SITM, right? SITM. This one also breaking away from here. Let's look at a STRL, which is Sterling Infrastructure. Just getting completely cracked underneath the 50 SMA. So you can kind of see that a lot of these themes that had been acting well, they're breaking down these leaders. Let's look at a VSH, Vishay. I really wanted to see something here on Vishay. Look at it underneath the 50. Go look at a Peng, right? Penguin, is probably one of the better ones, but look at how much noise is over here. Look at Dawkin, right? Go look at Dawkin. Just finally, everybody had a headache over here, and now everybody can hopefully rest as it breaks underneath the 50, and it's just no good, right? There's just so many of these names, these prior leaders. Look at Dell. My God, how could I have possibly forgotten about Dell? Just obliterated on today's session, right? Go look at an ANET, which I had to stop out of. Looking like it's trying to break out and hold over this prior high to just complete Armageddon and getting stuffed underneath the breakout level, right? This 178.50. So, a lot of these leaders aren't necessarily leading anymore. And I think that's something that should be in the back pocket of, people who are actively trying to trade the market, actively trying to position in different leading names. So With that being said, I will pull up my ready list here. I don't have it written on another screen today. It's just right here. And let's talk about some of these trade ideas for tomorrow. If you're interested in the healthcare sector, MRNA, very tight, very interesting here at the daily 20 SMA, retested the prior left side peak. I thought this would have been buyable today. It didn't really offer a setup in the morning, so I think you could just watch for it tomorrow over today's high. Retracement, really tight risk, reward, ultimately back up towards the highs if this theme is going to go again, and if it's going to go in a big way. As we talked about with the XLV, you might need a little bit of work there, but really tight risk setup. I don't want to say it's like rolling the dice for free, but it's such small risk that I think it's worth taking if it presents itself. Robinhood, I already own a position here. I added to it today on the pullback off of prior day highs. I think it's still giving you an opportunity. I think that there's room to buy it again over, if you don't have it, over today's high tomorrow. Holding up over the 2-day range high in here is good. Breaks through these highs, looks pretty good. Robinhood has been really constructive, offering daily higher lows and working itself higher. Looks good. Let's go on over to Roblox. Roblox is interesting because it sort of has this, it's not really a true stage 1 base, but it's trying to break from that. It's in this area here. The ideal entry is a look below and fail of 54, tag the 20, and then move, you're long from range low to range high, ballooning runners higher. But you could also just watch this through the top end of the range here at 58.45. So that's Roblox. Let's take a look at Frog, JFrog here. I think this is interesting as a bull flag over the 20, some strength in select software. So there we go. Can we get something over 88.65? Either it's a look below and fail and reclaim the 20 or prior day low or something like that, or just a break over today's high tomorrow could get this thing going to the top side. You got a little bit of time here to build some cushion ahead of earnings. And then lastly is Reddit, another name that I bought today. So I'm technically long both Hood and Reddit for transparency's sake. I'm talking a little bit of my own book, but I think this looks okay here in this flag range. Can we either go look below and fail into the 20 and the 200, support over 182.25, or just take out the highs of this flag and let's see if we can't get this thing running. A measured move just to slap it on there as a potential target. Let's go from low to high to pull back low. We're looking at roughly like 243s, and let's just see if we have prior structure up there, anything that's worth making note of. I mean, the left side peak's closer to about 260, 259. I'm not saying it has to go there, but that is the idea of the trade. You have a weekly shift in tone with lows, higher lows, breaking out of this, obviously relative strength to the broad market, making higher highs and flagging out here, reclaiming the 200, change in character. Let's see if we can't get this thing a little bit higher and working in the upward direction. Last but not least, some additional names that come to mind. Datadog has been a decently strong name recently. Kind of looked above those highs and came back into range. You might need a shake into the 20. I'm not long this name, but it's definitely one on my radar. Datadog, I am long PanW from lower. This looks like it might need a little bit of a pullback, higher lows over. This little breakout shelf 340 could be interesting. CRWD, CrowdStrike, how do we close over here? Probably pullbacks in some of these names. I'm just trying to jog my memory on some stronger software stuff. Yeah, probably a pullback on Fortinet as well, failing the gap up. And final one goes to Okta. Okta, yeah, similar. And then maybe Snow. Sorry to keep things dragging on. Just Snow, another strong software name. It looks okay, but I don't know necessarily that this is set up perfectly for tomorrow. That's going to do it for today's episode of the Midweek Market Update. Thanks for bearing with me in today's delayed session. We are on Euro time, which is actually kind of insane because that means it is effectively 1:30 a.m. here. So have yourself a green rest of the trading week. Hopefully we'll see you back up here in the office bright and early tomorrow morning for 8 a.m. Eastern time. If you learned something new or enjoyed the video, let me know down below in the comments section or by giving the video a very simple thumbs up. Again, we'll be live back at it tomorrow morning, 8 a.m. Eastern time for another episode and installation of the pre-market prep. Have yourself a green trading week, and as always, I will see you in the next one.